Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Juana.
Okay, so we got asked about rents. What are rents doing? You talk about home prices all the time, but what about rents? So CoreLogic actually just came out with a bunch of rent data. Annual U.S. rent growth continues to moderate in August, but price squeeze persists. What does moderate mean? What does that mean?
Level off, not get exciting.
Yeah. Okay, now here's the cool thing, though. We're going to show you a bunch of charts and graphs and things, but they have a bunch of different metro areas. Mm-hmm. And you'll be able to see what rents have done in the last 2 years, plus historically nationwide. It's pretty cool. It's going to give you a good idea where this is going. Okay, so let's go through the first set of data. We got a bunch of data here we're going to talk about. Okay, annual U.S. single-family rent growth slowed to 2.9% in August, the 16th consecutive month of declines. One, that doesn't mean for 16 months rents have dropped, right?
No.
They've gone up, but they've just gone up less.
Right.
Like instead of going up 20%, they went up 15, then they went 14, right? So
right.
The month over month.
Right. So, I mean, you have to kind of keep in mind that rents have gone up, depending on where you are, upwards of, in some places, 20+% in the last couple of years.
51 in Miami.
51 in Miami. So it only stands to reason that they would, in their words, moderate and return to something closer to the mean. Now, it's going to take time. So when you're seeing that maybe rents have gone down 0.5% or something like that, okay, yeah, but that's against having gone up 20+% or 51%. So does that really move the needle? Well, not really, not if you're a tenant. If you're a landlord who's owned the property for a long time, again, that doesn't really impact you because you're collecting the higher rent. If you are a brand new landlord, then yeah, that does impact you because if you were expecting that, 20, 30, 40, 50% rent increase, you're not going to get that right now.
Right. What's interesting is single-family rents have increased by 30% nationwide since February 2020, and we've had that in Vegas, basically, 30% rent increase. So when you say return to the mean or whatever, you don't mean they're going to drop back down 30% and go back to what they were.
No, I don't mean that. What I mean by that is that they're going to, in some markets, stagnate. So that means a minimal rent change, whether it's up or down, so that over time it kind of returns to something closer as far as if you draw a line between 2019 and maybe 2025, that line's a little bit smoother, not this and then this, right? So that's really what I'm talking about.
Okay, although annual U.S. single-family rent growth eased again in August, renters are still feeling the pinch, according to a recent CoreLogic analysis, which we're going to show you. The average American renter household spends about 40% of its income on housing costs, with lower income tenants bearing much of the brunt of inflation. The SFRI low tier saw the largest year-over-year rent cost gain in August, up by 4.2%, while the high tier registered a 2.4% annual increase. We're going to talk about the tiers because we have some data to show that. But here's the annual rent cost to gross income ratio. So you can see all the way to the left, 2013 to 2018, renters paid about 36% of their income. What's interesting is that is historically about the number you need to get a mortgage.
Correct.
Right, about 37% of your income. You have to be able to make a mortgage payment. And then in 2019, 2020, 2021, wages were going up and rents weren't increasing very much. Right? Well, 2021 they increased. But 2022 and 2023, you can see people are spending 40% of their income. What's interesting is home prices from 2013 to 2023 that was 10 years, are probably 50% higher or more. But rents have gone up to match it, but incomes have also gone up over 10 years.
Correct.
And we've had wage growth every year for the last 10 years. We haven't had any years of negative wage growth.
Exactly, yes.
Okay. I thought this was an interesting chart.
So I want to kind of address something real quick, because you were talking about in order to qualify for a mortgage, your payment shouldn't exceed 37% of your wages. So, and if you're a tenant and you're paying 40% of your wages against rent, why wouldn't you buy? And the reason's actually pretty straightforward, and that's that pesky down payment and credit score. So those are the two things that hold back most tenants from purchasing a home. It's they don't have sufficiently good credit, and they don't have the down payment money. Now, down payment is not the only factor, and that's why I did talk about the credit score, because people without a down payment can find other means of getting that addressed, whether it's through some sort of a down payment assistance program, seller closing costs. There are ways to get around that. However, there really aren't good ways to get around that pesky credit score. And remember, your credit score is not just some arbitrary number. It's a reflection of your past behavior regarding fiscal responsibility.
Yeah. Okay, here's another quote from the article. Well, annual single-family rent growth has returned to a moderate pace. More than 3 years of substantial increases will have a lasting impact on tenants' budgets. Single-family rents grew by 30% since February 2020, and small drops in some areas barely put a dent in the overall cumulative increase. For example, even though rents in the Miami area have declined by 0.5% since August 2022, they're still 51% higher than they were before the pandemic began.
So the thing to keep in mind here is Todd's point is that that the difference between the rent before the pandemic began and 2022 in Miami is 51%. Now, when you're looking at mortgage payments, those people who, 2019 had an X mortgage payment, their mortgage payment did not grow by anything between 2019 and 2022, while their neighbor who's paying rent, their rent grew, went up as much as 51%. So that's the benefit of home ownership, is having the ability to control your housing cost.
Yeah. Okay. Here's a chart. It's very telling. Okay. Goes back to 2005. Now remember, this is the percent increase. So this isn't rent stayed the same, went up and went down. Everything above 0% is an increase year over year. So you almost have to take this chart and turn it at an angle and watch it go up. But what's interesting about this, except for the great financial crisis where rents dropped 4%, so not a substantial increase, right? Year over year at the peak of the thing. Rents went up 4% basically every year. So you have 5, 6, 7, 8. Rents basically went up 2 to 4% per year. And then 2011 to 2021, rents went up 4% a year. It's like the normal amount of rent goes up 4% a year, right? Then you had the 2022 spike, and 2023 you can see that this is what they're talking about, the decline. It's not rents are going down. They're going up at a slower rate.
Correct.
What's interesting about this chart, you can see if you look all the way to the right, this thing's getting ready to go back to its normal of 4%. So the idea that it's going to give up all the gains doesn't look like that's going to happen. I mean, we don't think it's going to happen. There's actually only a couple cities we're going to show you that had some very, very minor decreases. Rents are still going up a lot of places. But what's interesting is whether you're in the low, middle, high tier, that's what all those different lines represent. Rents followed. Whether it was a super expensive home, a really cheap home, rents went up almost at this same rate, basically.
Right. So part of the reason why we don't think that rents are going to do anything negative that's dramatic is because of the things that we've been talking about for the last few months, which is the amount of housing stock available. There just isn't housing stock available. So long as there are not a ton of houses coming on the market and putting downward pressure on those rent prices, there's no reason to believe that rents would do something dramatic and decrease at a rate that would be unforeseen.
Okay, this chart, if you look at the light blue, that's August of 2022. And then the blue is August of 23. This is year over year for the previous year. So it's rent increases from August of 21 to 22 and then 2022 to 23. So all the way to and it's indexed by this year. So all the way to the left, you have St. Louis, which had the highest increase this year. Chicago next, Boston, San Diego, New York, and across. There were 3 that were negative, Miami, Vegas, and Austin. But here's the interesting thing. Vegas had about almost a 10% increase last year in rents, down 0.8%. I'm going to let you I want you guys to guess, what do you think rents are and how much is 0.8% per month? because somebody commented about, Todd, I heard the rents are absolutely collapsing there, that there was a house down the street and they had to lower it $350 to get it rented. Okay, hold on. That's anecdotal. That's a house that was probably overpriced. You can't use that as data. That is definitely noise, not signal. But what's interesting is every place in 2022, every single market had massive rents increase. You can see Miami was like 25% almost. Pretty crazy, huh?
Yep.
Okay, now here's the cool thing. This chart breaks it down. It's actually a table. And it has the median amounts over there. So you can see that even like Honolulu had 4% increase, 3,600 is the medium rent. So if you go all the way down the bottom, there's Vegas, 2,154 at 0.8%, with $16. So instead of paying 2,200 or something, you're paying 2,184 or something, right? Or instead of paying 2,170, you're paying 2,154. So it's not like rents are collapsing in Vegas, that they went down 0.8% in 1 year,
Right.
August to August.
Yep.
Right? Pretty strong rent data. So Juana, what do you think the outlook is? Let's just forget next year, because you can't predict next year.
Okay.
5 to 10 years. We've said before, we think home prices keep going up 4.6 or whatever percent. I don't know about next year, but if I went, it'd be easier to guess what home prices would be in 10 years than next year, right?
Right. I mean,
is a percentage change.
right, it's a percentage change, absolutely. I mean, looking at next year, we're not expecting anything dramatic for next year, just like we're not expecting anything dramatic as far as home prices overall. And regardless, really, of what interest rates do, this is going to be kind of a counterintuitive, but regardless of what interest rates do, I don't think it's going to impact rent prices, right? Because that's a whole different market than the buyer and seller combination. So I think that's an interesting thing. And to your point, that rents go up usually 4%, give or take, annually. That's true, obviously. But how much do fixed rate mortgages go up annually? They don't. Do your property taxes and homeowners insurance go up annually? Yeah, they do. But I'm willing to bet that they don't go up 4%.
And they're also a much smaller number.
Right.
Yeah, they're not, $2,100 a month. That goes up 5%,
right.
4%.
And please, if you're going to put in the comments about, places in coastal areas whose homeowners insurance went from $12,000 a year to $120,000 a year, those are anomalies, and those are because, those areas have, we'll put it this way, they have history with getting new properties every few years when a hurricane comes through. So insurance companies have decided that they no longer want to play that game, and they're going to charge the customer an appropriate amount that is commensurate with their risk. But for the rest of us that do not live in coastal areas or do not live in California, because that's the other one, for the rest of us, insurance doesn't tend to go up by that much. As a matter of fact, your car insurance is likely to go up a greater percentage than your homeowner's insurance. So you do have to kind of keep that in mind.
Homeowners have 40 times more net worth than renters. People who own homes have 40x net worth,
right.
More, 40 times more.
Right, because they are actually growing their wealth on borrowed money. So what I mean by that is you borrow X number of dollars from the bank to buy the house, and then the house appreciates at a percentage rate, not based on your down payment, but based on the total purchase of the home. And remember, most of that money is borrowed from the bank. So that's part of the reason why you have that wealth as far as homeowners, because a lot of their wealth is based on their real estate holdings.
And all those people who borrowed money at 2.75%, while home prices are going up 4 or 5%, we're killing it. Because if you borrowed $500,000 to buy a house, and the house is going up 5% a year, you're making 3% on $500,000 more than you're paying for it.
Right.
So you're just basically putting that money in your pocket, essentially.
Right.
Yeah.
And not only that, but you may get to do that tax-free depending on how much appreciation you have and when you sell the property.
What we'll do is probably 3 to 6 months, we'll do another rental video. We'll just go over the numbers again. Rental videos aren't super, most people watch a channel or either own homes or they're thinking about buying a home. So we don't have a lot of renters watching wondering if their rents are going to go up, but they're going to go up. We know that they're going to go up.
Right. So if you are not a tenant, but if you are a homeowner, this actually pertains to you too, because you may be an accidental landlord at some point, so this may still be of value to you.
Yeah.
We do have other videos about being an accidental landlord, so feel free to search through our library and find them and watch them.
Yep.
Okay, anything else?
No, that was it.
That was it. Okay, so if you're thinking of selling in Las Vegas or anywhere else in the nation, or buying, please consider using our services. Reach out to us and we'd love to have a conversation. In the meantime, please remember to like the video, subscribe, hit the notification bell, share the video, leave us real estate related notes in the comments. We appreciate them, and we will see you on the next video. Bye.
Bye.